Good afternoon, everyone. Steve Ribble here with Shrink My Taxes, bringing you another tax tip designed to help you shrink your taxes. Variable annuities are a very popular investment vehicle for many Americans. With all of the market ups and downs that we've seen lately, a question I'm getting a lot is, can I deduct a loss from my variable annuity? So that's going to be the subject of today's tax talk. Are variable annuity losses tax deductible? Yes, they are. Here's some of the catches, though, to be able to deduct this loss. First of all, you have to surrender the contract. Now, what this means is you have to completely cash out this contract. You cannot use a 1035 exchange and move it from one annuity to another. What happens if you do that is you actually transfer the cost basis and you're not able to deduct the loss. You're going to deduct the loss from the original cost basis minus any withdrawals that you've made, and you have to add back in any surrender charge that you paid to surrender the annuity contract. So let's look at an example. Let's say you bought an annuity XYZ 3 years ago for $100,000, your original cost basis, and you recently sold it for $80,000 net. In other words, you received a check for $80,000. You made no other withdrawals from this contract, and your surrender charge that you paid was $3,000. Well, your deductible loss in this instance is going to be $17,000. And the easy math is $100,000 minus the $80,000 that you got net plus the $3,000 you had to add back in for the surrender charge gives you the loss that you're able to take. Now the problem arises is, where do you take this loss? And this is where there's a lot of confusion out there. There's two schools of thought on this. This is a definitely unsettled area with the IRS on where to report this loss. What you do know for a fact is that it's not an investment loss. In other words, you do not put this loss on a Schedule D with capital gains or losses. It does not offset those gains or losses. So where do you put it? The conservative approach is to file it on a Schedule A under miscellaneous deduction. What happens when you do this is it limits the deduction to an excess of 2% of your AGI. The preferred way, and the way that we do at Shrink My Taxes, is we actually look at Revenue Ruling 61-201, 1961-2 CB46. This revenue ruling dates all the way back to 1961. And in this revenue ruling, it seems to support treating of a loss from a variable annuity as an ordinary loss. In other words, we're able to put the entire loss amount on line 14 under other gains or losses on our 1040. Doing it this way enables us to take the full loss, so we're not subject to the 2% limitation, and we're also not subject to any AMT issues by taking the loss on line 14. So hope that helps clear that up on how to take a loss from a variable annuity. If you have any other tax questions that you'd like to see answered, you can email those to info@shrinkmytaxes.com. We appreciate your time. I've got my contact information up there. If you've got any questions, you feel free to give me a call, or you can reach out to us on the web at shrinkmytaxes.com, or you follow us on Twitter at shrinkmytaxes.